What up, guys and guys? Welcome back to another trading episode. Today I'm gonna be showing you how to trade a bull flag. Okay, but just for disclaimer, I am not a professional. This is my own opinion, whatever I say and do. So just take it with a grain of salt and do your own due diligence. Okay. Without any further ado, though, let's get to the trade. Okay, so this is a STZ Constellation brand. Okay, this is a 3-minute chart. This is an intraday chart of the Constellation brand. Okay, and this is where we're going to be focusing our trade. Okay, the bull flag here. Okay, this is where the bull flag is. I don't recommend trading against a trend, but I'll explain you this. Okay, so as usual, we like to go to the daily chart, but the thing is the daily chart doesn't do much for this trade because it then late on of the day and it's not breaking any new level. But just for for sake, I want to just show you. So okay, so yesterday, the day before today, this is today. Okay, and yesterday we have this like bullish candle here and a lot of volume, so people was already buying in before the earning for today. Okay, so today, the reason why the stock move is the earning, just so you know, and we'll go over that a little bit later. But just for some more information, that was the one, that's the daily chart. Okay, this one is a 30-minute chart, and you can see anything in the gray is the pre-market or after-market. Okay, so as you can see here, this is yesterday trading, and this was the the low was here, and then there was a higher low. Okay, and look at today trading action, it did not go lower than the second low here, so this is somewhat bullish. Okay, just so you know, because this is somewhat trading against the trend, but just I'm trying to explain you the reason. Is not really trading against the trend, but I'll show you more. Okay, so this just some explanation. All right, so just get back to here. So usually for you to make a trade, you need some kind of catalyst. Okay, on the fundamental side, and today the catalyst for STZ is the earning. Okay, the earning per share was 218 versus 116. Okay, so it beat on the earning per share by 31%, and then also the revenue, which is usually more important. Okay, and it's also beat, okay, by 3%, 1.9. Okay, by 3%. That usually the most important thing is the guidance to the next quarter, but due to the virus, a lot of company are withheld guidance at this point, so you don't know that. But it's a decent earning. Basically, there's more information you have to to dissect into, but for now, I mean, if you just look through this, it's a decent. And then if you could look at the price action, the minute the earning came out, it popped up, but it at open, it kind of consolidated a little bit, and then it moved down. It's actually moved down with the market. I'll show you a bit later. Okay, so at this point, that is the catalyst for the trade. So let's go to another chart. Okay, this is what I use. This is 1-minute chart, and this is a 3-minute, the same thing over the previous chart. Okay, so I like to combine these two charts together. Okay, because you could focus on here. This is 3 minutes, and this is 1 minute. Now you see it with more clarity. Okay, of the price action. Okay, this is technical, man. I don't use a lot of the indicator and stuff. This is just bare bones stuff that I use typically. Okay, so let's put in some more. I like trend line. Okay, so trend line is very important because I think that guide you whether or not the stock is still in the trend or not. Okay, at this point, if you see here, if you draw this downtrend line, see the stock moved down, consolidated sideways for a few hours, and it went out of the downtrend line here. Okay, so that's a good thing. So it's put in the bottom. Okay, and then it put in a higher low. Okay, and then it put in a higher high. All right, so as you can see, this stock is no longer in the downtrend line. So I don't recommend trading against a trend, but since it's based it out, it's bottom out, and it's starting a new is the new trend at this point. Okay, just you can see. Okay, so for this trade to work properly, I would take a look in some of the condition. Okay, so the first condition is that relative strength, okay, of this stock. Okay, this stock relative strength compared to the S&P is actually really is much stronger. Look at the S&P, right? They open up, consolidate at the open, consolidate open. This is the S&P 3-minute chart, okay, intraday, okay, and then the S&P just break down. That's where the stock break down also, but S&P continue breaking down to this point while the STZ, consolidate sideways. So that's the relative strength for this stock is much stronger than the S&P, and it was down like maybe like 1% while the S&P was down like 3% or more. Just so you know, all right. So that's one thing. And then the sideways consolidation, the bottoming process, I just talked to you about that, okay. High and decent volume, okay. So basically, this put in a high here. Okay, so that means the range is broken. Okay, this range here, and then the volume. You see the buying volume started coming in. It's not a lot. This one is more than this one, so it's good. Okay, so that's is like a signal for you to see. Okay, so that's something you have to pay attention to. Okay, entry price above the VWAP. Okay, VWAP is very important because it could act as a resistance or support. So when the price is above the VWAP, okay, you could see here is above the VWAP, it become like a support level. Okay, so that's one thing you have to look about. And then when you trade on the long side, you want to trade above the VWAP typically. Okay, just so you know, typically nothing is concrete. Okay, everything is flexible. So just so you know, so that is so once it's above the the VWAP, the VWAP become like a support, some kind of support, and then you could also see the secondary support here too also, all right. So that's one thing. And then risk reward. Okay, so the thing about Buflag is that people love Buflag because you risk a small amount to gain a lot. Okay, and if you know about Buflag, usually it move up, go sideways, and move up again. It's like a measure move. Okay, so if you could count like 1, 2, 3, 4, 5, right, and then 1, 2, 3, 4, 5. So at least 131 should be the target for you. Okay, and then yet you risk at this point, this range right here, maybe around 75 cents. So you risk 75 cents to gain like more than $1. Basically, yeah, more than $1.50. Okay, so basically you risk $1 to gain at least $2. But in this case, if you do it right, you actually gain more than just is a 1, 2, 3, or 4. Based on this chart. Okay, so just so you know. Okay. And let's talk about the entry. Okay, entry should be this high right here, this candle high. Okay, so that should be the entry. That's one option. Okay, second option, some people do at 129.50. It's not a whole number, it's like a semi whole number, but some people might want to go in there. Okay, so that's another one. And then stop loss is depending on your taste. Usually this is the stop loss. Okay, right here, the low of this range is the stop loss usually. Okay, some people do it below the 20-day moving average or below this this secondary support here. So that up to you how you're gonna trade is up to you. But as you can see here, and one more thing, okay, the consolidation here, the longer the consolidation, the better. Okay, because a lot of people got stuck in it, got trapped in it, and then when it break out of the range, it determined the resolution of the move. Okay, and that whoever short have to cover and things like that, and then that pushed the price up more. Okay, just so you know. Okay, so 130 also is a possible add number if you want, just so you know. If you are aggressive trade, 130 is a possible a place where you could add onto the trade. Okay, just so you know. All right, so that's about the condition. One thing about the stock though, the problem with the stock is very spready. It's spready because it's not liquid. Today it trade around 2 something million share, but it was slow and it's spready, and that's also contributes to the problem because like the spread could up to like 20 something cent, and then if you do this stop loss right here, you risk around 70 something cent. So that could be a problem with this stock, especially when it's spready, okay, and it's not liquid. So price could fluctuate very big, okay, and then it could, if you put in the stop loss, it's gonna trigger you a stop loss and take you out of the trade. So that's something to consider about. Okay, of the stock you trade. Okay, so basically I guess that is about it all for the condition. But when you trade, right, even though with all these conditions, this trade can fail if you don't follow one important thing. Okay, you have to trade with the S&P. Okay, I don't care what, you have to calibrate your trade with the S&P, and I make a separate chart for this, okay, a separate slide for this. So this, I overlay the S&P and the STZ to show you how important this is, okay. And this is something I want you to take away. This is the most important thing. Like, always trade with the S&P. Try to, okay, because 80% of the stock move with the S&P. Just so you know, okay. All right. So basically, the S&P, right? You can see here, say it moved very similar to the S&P, right? It's consolidated open. When the S&P moved down, it's moved. The stock moved down with it. Okay, the only thing is different. It's sideways, so it's the relative strength is much stronger, okay, than the S&P itself, okay. And while it make a high, the S&P make a lower low. But the thing right here is that when the S&P make a lower low here, it's moving sideways. So the relative strength is, for this part of the trade, is very strong. And when the stock is moved down, this make a new low, it's extended. So the general market extended and it has to pull back. So, and yet when your stock is moving sideways while the market extended to the downside, when it move back, it will move the stock up. So that is something you need to take away with all your trade, calibrated with the S&P. And as you can see here, the minute this downtrend is over, it pull up, the stock start to move. And once the stock move up like this, it's got a bid, and those people who short, they have to cover. So it move on its own merit, up the stock. And even though, the S&P move down, it's still moving up because at this point, all the trader, the short has a cover and all that stuff, okay? And then later on, the S&P move up again, and that fuels the up move even more. All right, so yes, you could see here is very important. Like, this is something I want you to take away, okay? So basically, that is everything for this trade, okay? So if you have any comment or question, drop it down in the comment section, all right? So basically, that's it, guys. So anyway, good luck and happy trading, guys. Thank you for watching. Bye.